Welcome back to the cryptowrld channel, everyone. My name is Josh, and right now there's not many people watching these important Bitcoin indicators that are currently flashing short-term warning signals for the Bitcoin price. And at the same time as that, we're also seeing some short-term warning signals for Ethereum as well, which I'll be talking about later in this video, so definitely stick around. First of all, just giving you a quick update on what the US stock market did today. This right here is the Nasdaq 100 index on the daily time frame, and as you can see here, we've seen a bit of red in the stock market today, specifically in the tech stocks. And due to this small sell-off in the stock market today, we've seen a bit of a pullback in crypto prices today. But when it comes to the Nasdaq 100 index, we do have some technical support sitting at around 12,100 to 12,200 based on this previous horizontal level of resistance, which we have currently broken above. But even though the US stock market had a weak finish to the week, the overall week was of course more bullish than bearish. If you're looking at the weekly time frame, for example, the most recent weekly candle close for the Nasdaq 100 index is of course a green week. And while we're looking at the Nasdaq 100 index on the weekly time frame, you can see here in the weekly RSI that the Nasdaq 100 index was recently in oversold territories with the local lows that we saw over the past couple months. So due to this happening, technically speaking, we were due to see a bit of a relief here, which is essentially what we're seeing at the moment and what we have been seeing over the past few weeks. But just keep in mind, with the economy essentially in recession, the signals that we're looking out for in the weekly RSI for the Nasdaq 100 index at the moment are essentially reversed for the signals that we have previously looked out for in the more bullish times when we're not in recession. And what I mean by that is basically during the bullish times, the RSI on the weekly time frame is mostly chopping around in the top half of the RSI indicator, so above 50. And quite often during these bullish trends, we actually see the weekly RSI for the Nasdaq 100 index enter into overbought territories, signaling that we're due for a bit of a short-term cool-off, which is essentially a relief back to the downside due to too much bullish price action playing out all at once in the shorter term. And so these shorter term movements back to the downside, these reliefs back to the downside, basically cool off the weekly RSI back down towards neutral levels, towards that 50 level, which technically gives the weekly RSI and the stock market more room to the upside. But as I just said, because the economy is essentially in a recession, I say essentially in a recession because it's pretty obvious that that is the case, even though it technically hasn't officially been confirmed as a recession. But anyway, even though we're essentially in a recession right now, and we've technically been in a recession all year long based on Q1 GDP numbers and Q2 GDP estimates. And so based on that, obviously this time period is essentially the reverse of this time period, obviously. And so since that is the case, we're looking for the reverse signals in the RSI indicator, which basically means the weekly RSI for the Nasdaq 100 index is mostly chopping around in the lower half of the overall RSI indicator, so essentially 50 or below. And just like how we need to see regular short-term cool-offs during the bullish times to help reset the RSI towards 50, during the bearish times, we also need to see some cool-offs, except this time round, because we're in a larger downtrend, the cool-offs are actually reliefs back to the upside in the shorter term, which help reset the RSI back towards 50, giving us some more room to the downside later on. And we saw pretty much exactly that happen towards the end of the first quarter of this year, entering into the second quarter of this year. We saw a decent-sized relief rally in the stock market, which also reset that weekly RSI up towards around 50, giving us more room to the downside in both the RSI and the stock markets for this next leg to the downside. So I'll be keeping a close eye on this weekly RSI because as it approaches 50, that basically means we have seen the reset in the RSI and we do now have the room back to the downside again. So this is yet another important indicator to keep in mind when you're looking at the US stock market, specifically the Nasdaq 100 index. And the reason why the Nasdaq 100 index is important to keep track of is because crypto prices are pretty correlated with what the Nasdaq 100 index is doing, which basically means if the tech stocks are dumping, we're most likely going to see a dump in crypto. And if the tech stocks are pumping, we're most likely going to see a pump in crypto. And this correlation between the stock market and crypto prices is not anything new either, because for example, the longer term viewers on this channel would know that I've been talking about this correlation between the stock market and crypto prices for over a year now, but the correlation goes even further back than just 1 year. For example, the March 2020 crash, the stock market was obviously dumping during that time period, just like crypto prices, and even the 2018 bear market, we actually saw a major dump in the stock market during 2018, just like crypto. So if this weekly RSI resets back towards around 50 and then we start entering into another dump, that should be a warning sign for crypto as well as the stock market if we do end up seeing that play out again. But anyway, speaking of crypto, getting into the Bitcoin part of this video, this right here is the daily Bitcoin chart, and not much has changed over the past one day, so I'll keep this really quick. Obviously, we're still trading above this previous resistance, sitting at around $22,000 per Bitcoin. And as I mentioned in my last video, it is very important for Bitcoin to try and hold above 22K, because if we start breaking back below $22,000, then obviously that would be at least a short-term bearish signal, but could even turn into a larger bearish signal on the daily time frame, because that is quite similar to what we saw towards the end of the first quarter of this year, entering into the second quarter of this year. Obviously, we saw a brief breakout above massive horizontal resistance. We retested it as some short-term support for a short while, but then what happened was we confirmed a breakback below that level, which was at least a short-term bearish signal at that stage. But when we broke this other level of support, that was a larger bearish signal for the daily time frame here, which basically signaled that next leg to the downside. But just keep in mind, we haven't yet seen a breakback below 22K, and even then, we would also need to see a break below this level of support, which is sitting just below $19,000 per Bitcoin. And also, the daily Bitcoin RSI is still currently in an uptrend, which is good to see, and we're not yet in overbought territories like what we saw at that previous local top towards the end of Q1. But with that being said, zooming into the shorter term, taking a look at the 4-hour Bitcoin chart, and right here we have that 5-day simple moving average, which I talked about in yesterday's video. And so far, at the time of recording this video, we've currently seen one 4-hour candle close for Bitcoin below this simple moving average. And so technically speaking, this is one bearish confirmation that we have here just on the 4-hour Bitcoin chart. And by the way, this moving average is currently coming into play at around 22.8K. But in order to see even more confirmation here in a potential bearish scenario, it would be great to see some sort of retest, flipping this moving average into new resistance. Now, it is important to mention that we don't always see a retest on the break to the downside, like what we saw last time around 1.5 to 2 weeks ago. We just simply saw some 4-hour candle closes, and that can be enough confirmation. But to have even more confidence in a potential move further to the downside, it would be great to see an actual retest of this previous moving average to flip it into new resistance, like what we saw towards the end of June. And this next 4-hour candle close is also a daily candle close. So if we see yet another 4-hour candle close below around 22.8K, then obviously that would not be a good sign for Bitcoin in the shorter term. And other than that, I would also be looking towards this previous low coming into play at around 22.3K, because if we break below that previous low, obviously that would mean the Bitcoin price is forming a lower low in that case. And considering the fact we have already confirmed one lower high on the 4-hour Bitcoin chart, a lower low here would essentially confirm a trend reversal. Basically, a bullish trend reversing into a shorter term bearish trend, similar to potentially these moves that we saw over the past 1 month or so. And on top of the Bitcoin price and this moving average, I'm also, of course, keeping an eye on the RSI and the MACD on the 4-hour time frame, which right now are technically pointing slightly more in the bearish direction, especially the 4-hour Bitcoin MACD. At the moment, the histogram is sitting in the red, with the actual MACD itself trending to the downside, which technically means we're currently seeing some short-term bearish momentum start building up in the Bitcoin price. And looking at the 4-hour Bitcoin RSI, for as long as this is chopping around in the top half of the RSI above around 50, this is of course a sign of strength, showing a lot of bullish momentum in the short-term price action. But if the 4-hour Bitcoin RSI starts breaking below 50 into the lower half of the RSI, that is how you know we're seeing more bearish momentum building up here in the short term, like what we saw back here as we're breaking below this moving average around 1.5 to 2 weeks ago, and also like what we saw towards the end of June. So like I mentioned in my last video that I posted yesterday on the channel, the short-term risk to reward at the moment is somewhat elevated, which basically means the risk of a short-term pullback for Bitcoin is slightly higher than the potential reward for the Bitcoin price going further to the upside in the short term. Now, obviously, if you're someone looking to buy Bitcoin and hold it for many years to come, as in 5 to 10 years from now, none of this really applies to you, because once again, I want to make it clear that this is all talking about the short-term bullish and bearish trends on the 4-hour chart. And by the way, the invalidation here, so to basically invalidate this bearish signal, then basically we'll need to quickly see a break back above this 5-day simple moving average at around 22.8K. But with that being said, heading into the Ethereum part of this video, as we can see here, we still have that Fibonacci level, the 38.2% Fibonacci level of resistance sitting at around $1,700. And considering the fact that $1,700 is not only important for Ethereum based on this Fibonacci level, it is also important because that was massive support in the past for Ethereum, which means that $1,700 price level is massive resistance right now for Ethereum. And recently, the price of Ethereum has gotten pretty close to $1,700 before getting a bit of a rejection here, here. And at the same time, the daily Ethereum RSI got pretty close to overbought territory. So we're due to see a bit of a cool off here, whether it's sideways consolidation or a pullback, just something to actually cool off the daily RSI. And if you're zooming into the shorter term, taking a look at the 4-hour Ethereum chart, this is also showing the same picture here with a bearish divergence now confirmed on the 4-hour Ethereum charts. And in case you're new to the channel, a bearish divergence is simply higher highs in the price action and lower highs in the RSI. And this simply indicates a loss in bullish momentum at the moment, which once again agrees with what the daily chart is showing. So pretty much we're due to see a bit of a cool off here, whether that's more sideways price action or potentially a bit more of a pullback to the downside if we break key support. And this support I'm talking about right here is this golden ratio coming into play at around 1480 to 1470. So basically, if Ethereum breaks below this previous low that we formed just the other day, then that could signal a further pullback in the price of Ethereum just in the short term here. And on top of this bearish divergence on the 4-hour Ethereum chart, we're also seeing the 4-hour Ethereum MACD currently trending more bearish than bullish. But while we're looking at the 4-hour Ethereum chart, if we're looking at the 5-day simple moving average, right now as I'm recording this video, the price of Ethereum is currently still finding some short-term support around this moving average, which is currently coming into play at around 1520 approximately. But like I said on the Bitcoin chart, if we confirm a break below this 5-day simple moving average, then just like these other times, that would of course be a short-term bearish indication, telling us that we could be due for a bit more of a pullback in the price of Ethereum. But once again, we haven't really seen a confirmed break below this moving average as of recording this video, but this is still something important to keep an eye on in the short term because the Ethereum price is very close to this moving average, and like I said, a confirmed break below would signal potentially more bearish price action. And if you want to maximize your profits in crypto, make sure to check out one of these videos popping up right here on your screen. The video in the top left shows you how to make money if the price is going either up or down, and the video in the bottom left shows you how to make money in a choppy sideways price range. But anyway, that's everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.